Hello traders, Gary Wagner here, approximately 10:30 in Honolulu, 5:30 in New York. It is Thursday, 20th day of September 2018, and this is the Daily Report for Gold and Silver. You wouldn't know that there was selling pressure by looking at the net change in gold, with gold futures currently up about $3.80 and fixed at $12.20. But it is severe dollar weakness that's actually more than compensated for any selling pressure evident in the gold market today. Silver also closed higher on the day, up almost 8 cents at $14.35. That's a net gain of about 0.5%. But the darling of the metals complex today has to be palladium futures, $1,043.50 per ounce, after adding an advance today of almost 1.25%. When we look at the chart on the bottom of the screen, this is a daily chart, we can see that the market in the last 3 trading days has moved from approximately $974 up to just shy of $1,050. And as I said, it was absolutely dollar weakness that has been really adding to any kind of buying power in the precious metals complex, or accounting for selling in markets such as gold and silver. The dollar index losing almost 0.75% today, a 66-point drop, about 2% over this week alone, and currently fixed at 93.45. U.S. equities close at a new all-time record high. The Dow Jones Industrial Average gaining about 251 points, closing at 26,656. Standard & Poor's also closing at a new record high at 2930, and the Nasdaq Composite trading almost 80 points higher, back above 8,000 at 8,029 after adding a full percentage point gain on the day. Traders, the first chart that we are looking at today is a weekly chart, and this is of spot gold. Spot gold currently at $12.07 and change. It has had quite a substantial rise this week, moving from these lows at the beginning of the week at $11.93 up to well over $1,200. Now, I've just pulled up the Kitco Gold Index. As you can see, it is dollar weakness that accounted for over 100% of the gain. Normal trading actually bid the precious metal lower by about $5.10. Weakening U.S. dollar added $8.30, and that's how we resulted in a net gain today of $3.20. We had selling in trading in terms of the precious yellow metal, and dollar weakness more than made up the difference, which brings us to our current trade and December gold futures. We're looking at a weekly candlestick chart. We can see that gold futures also had a considerable gain on the week. However, at the same time, it must be noted that when we look at recent activity in context from what came just before it, meaning last week, we can see that we continue to have a range compression, and we are getting closer to the apex of this compression triangle. And the thought process behind this particular pattern is that as the market gets closer to the apex and the range compresses, what happens is it builds up energy. That energy is released in the form of a breakout at the apex, which can be a breakout to the upside or the downside. However, typically the market will break to the prevalent trend direction, which has to be noted as downward in this case. It is for that reason that we are going to maintain our current short position. We have stops in place just above here at 12.1813. We're going to hold those stops and see if pricing does break down either Friday or at the beginning of next week. And traders, as we have spoken about over the last couple of days, it has been palladium that has caught the attention of many of the precious metals traders. A dynamic move this week, taking it up to $1,043, a net gain right now of about $13 on the day, and almost a $75 rise this week alone. And traders, the last chart that I do want to look at today is the dollar index. This again is a weekly chart. We can absolutely see the top of this market just above 96.50, and the market at this point is at 93.47. So if we have seen a net decline of approximately 3% over the last 6 trading weeks. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.